Well, thank you very much for this, Hal. And, we are heading quickly towards the end of August. I know it's for many people the mid part of the month, but we always have to look a week ahead here at the forum when it comes to predicting gas prices. And it looks like last week we saw, as I had mentioned, about a small decrease for pretty much everyone across the country. Only because right now we're not seeing any signs of the usual disturbances that cause prices to spike. Things like hurricanes in the U.S. Gulf Coast. I see there's a little disturbance, but it's going to miss and stay in the Atlantic. So that's not really causing any concern about refinery disruption. Demand remains robust, especially in the United States where the economy is extremely strong. And so for that reason, we're seeing a bit of a crimp in supplies for diesel and for gasoline. Even oil. If you look at the weekly petroleum inventory report from the U.S. Department of Energy, it continues to show a bit of a lag where gasoline supplies are down 1 or 2%, diesel about 9 or 10%, and oil about 6 or 7% in terms of inventories and stockpiles compared to last year. But there's an expectation that with OPEC letting up on production and creating more production, that we're going to have the availability of more supply. In the summertime, it's critical how people understand that there are, in fact, two markets that are important for gasoline prices. There's the oil market, which everybody pays attention. Yeah, well, oil's dropped $5-6 a barrel, so we should be seeing a big decrease in gas prices. Not really. You don't put oil in your tank; you put refined product in your tank. It's like saying the cost of lumber has dropped, but housing goes up. So the two are connected, but they're not connected necessarily in terms of the outcome, which is price. And we've seen, a moderation of gas prices, but we haven't seen them fall to the extent that we saw, in say the February of this year, March of this year, and in the off season. We're also seeing signs that diesel prices, although they have been very high, are not really letting off, and that could be a concern sign for September. I know it's a month away, when we start to think about heating oil, diesel, and at transportation, farmers taking their crops off the fields, more people turning on their furnaces, and isn't just gas, natural gas or propane. They also, in many parts of the United States, especially the U.S. Northeast and Atlantic Canada here, use heating oil. So we could start to see those price pressures move up. That's not going to happen yet. But in the meantime, a couple of geopolitical factors, I think, are going to play very heavily into the price of fuel this week. The meeting between Donald Trump and Vladimir Putin will have a lot to do with whether the United States doubles down on sanctions on pretty much everything Russian, and the continuation of really swearing away the use of any oil or natural gas from Russia. Should there be some kind of an agreement, that would probably set the market in a position where it will continue to drop the price of oil and other refined products, or what they call petroleum products. That could mean, even a greater savings than what we're seeing now in terms of prices declining. By the way, this time last year, we were looking at prices in the 180, 170, 180 range versus 130, 140. So depending where you're in the country, yes, people are complaining that it's high. But compared to this time last year, you're saving an average of 25 to 30 cents a liter. So that's pretty significant. And it's mostly because of two factors. One, oil is about $10 to $12 cheaper than it was this time last year. The Canadian dollar, although it's extraordinarily weak, 138 pennies to buy US dollar. We price all of our commodities in US terms. We're also seeing the benefit of, of what has been, for now, the temporary suspension of the carbon tax, which was about 21 cents a liter. Nevertheless, I think it's critical how a lot of people don't know there's a second carbon tax. It is very much in place in across the country. It's now not only costing you more ethanol in your gasoline, which, as you know, doesn't have the same energy properties. And it's for that reason that people use gasoline infused with ethanol, and most of it is up to 15%. They will get less mileage. The efficiency isn't there. Using food to make fuel, I think, is in of itself a bit of a quandary and a bit of a concern, especially for politicians who have advocated over the past. But refineries have had to bring in more ethanol into gasoline. Most of it made in the United States, by the way. So if you think it has something to do with helping Canadian farmers, it doesn't, especially the processing of it. So let's be clear on that. Refineries in Canada have had to buy more reformulated and RFP, and of course, ethanol blend gasoline from the United States. And for that reason, we're starting to see a bit of upward pressure on things like the price of corn. Anybody bought a dozen or a baker's dozen of corn will notice this year, hey, it used to be $6, $7, $8. Now it's between 10 and 12 bucks. Even at your corner, corner places where farmers are offering the product, food prices are much higher, not just because of the weak Canadian dollar, because all commodities are, as I mentioned earlier, priced in US dollars, but also we're displacing a lot of those food production to make fuel. And the refiners are having to do that to meet the ridiculous requirement. They reduce emissions by 30% by 2030. To do that, they have to buy carbon credits. And those carbon credits at about $250 to $500 a carbon pop equals anywhere between 9 to 18 cents a liter. Not 13 cents, but 18 cents a liter. In the case of last year, for instance, British Columbia, where they have the BC LCFS, the BC Low Carbon Fuel Standard, carbon credits in the third quarter of 2024 were almost $500. Now, according to the federal government's own regulatory impact analysis statement of 2021, when they brought in the clean fuel standard, so-called second carbon tax that I called, they said for every $110 of a carbon credit, it's 4 cents a liter. So if something's $500, you can pretty much expect that works out to 18 cents a liter plus HST or GST. So that's where we're heading, folks. You still have a carbon tax, and it's not even the industrial carbon tax, which is the OBPS, output-based pricing carbon tax. But look, as long as we consider and can continue to pursue this net zero fantasies, not only will we be subsidizing EVs that no one wants and paying it through with debt that we no longer have, we're going to continue to find our country losing ground when it comes to the value of the Canadian dollar and our purchase power. That's it for this week as far as gas price updates are concerned. But the net zero policies in this country are really having a detrimental effect on our ability to make ends meet, especially when it comes to energy.